How's it going, everyone? Today we're going to be looking at Dave's stock, which is up 7.5% on the day, and it's up 219.5% over the past 6 months. And we're going to explain some of the reasons why this stock is trading so much higher. And it's coming off of a great earnings result that they had for Q1 of 2025. You saw total revenue growth 47% year over year from Q1 2024 to Q1 2025. You saw adjusted EBITDA grow $31 million year over year. Extra cash origination volume increased 46% year over year, and 28-day delinquency rate declined 33 basis points down to 1.5%. So great growth, as well as upgraded guidance for 2025. They're now guiding total revenue growth of 33 to 37% year over year, as well as adjusted EBITDA growth 79 to 91% year over year. So very strong guidance from this company. That's a big reason why the stock is trading higher, as well as their total membership grew by a good amount, 15% year over year growth in membership. They had 12.4 million members in Q1 2025. So that is very impressive as well. But if we take a look at this valuation, though, it is starting to get stretched. It's now trading about 67.5 PE and a forward PE of 39.5. So the stock is becoming a lot more expensive as it trades higher. Seeking Alpha analysts are giving a hold rating of 3 out of 5. Wall Street strong buy 4.75 out of 5, and a quant rating hold of 3.5. You're getting an overall grade of B for growth. Profitability is C+, but valuation F. So there are there's downside risk involved with this company. It is trading a much higher PE, but they had a huge beat in earnings. They beat earnings per share by $1.21. They also beat revenue expectations by 14.4 million, and they posted revenue of 108 million. For this upcoming quarter's earnings, you're looking at about $113 million in revenue that's expected, and $1.49 earnings per share. However, you can see that there's the estimate versus the actual earnings per share, as well as revenue, was off by a lot. So it's really hard to base any sort of idea of what these earnings will be based off the estimates. So not really something to pay attention to, considering that they were off by $1.21 earnings per share. However, moving on, you can see the company did grow its revenue at a very strong pace. They had $73.6 million in revenue for March 31st, 2024, and they're now almost at $108 million. Here we are at Q1 2025. It's a very impressive growth. However, net income did decline some. It declined from $34.2 million in Q1 of 2024. It's now down to almost $29 million, $28.8 million in net income. But you are getting very strong revenue growth. So it'll be interesting to see if this company continues to grow their profitability, or are they growing this revenue at the expense of their overall margins. However, if we look at the stock price forecast, you're looking at a median stock price of 201 and a high of 250, but only 8 analyst ratings to go off of. So it is interesting to see, are there enough analysts to actually cover this to give it an accurate forecast? So not really something we can go off of. However, the stock has performed phenomenally, and it's interesting to see if it will grow into that PE, which it really needs to. It really needs to continue improving its overall profitability and earnings per share, because that 67 PE is very expensive. Forward PE, not too bad, but we do need some more growth from this company. So let me know in the comments if you think that this stock is a buy, or if you're not touching this one, it's too expensive. If you got value, please consider subscribing. Y'all have a good one.